The Ultraversity. Part 4. The basis of cost accounting. The universal mechanism for controlling the operation of the economic circuit is cost accounting. An honest cost accounting system involves more than bookkeeping technique. It must have as its basis an honest and scientifically sound economic philosophy, and its operation must be the exemplification and realization of that philosophy. Such a cost accounting system will be based upon previously stated principles. The first principle is that human effort is the only agency that is to be compensated. Nothing but wage charges can enter into any cost accounting system. Materials cannot be purchased or sold, and no price can be placed upon them. A distinction must be made between the material and the effort expended upon it. Compensation can be made for the effort expended on materials, but no price can be paid for the material. Material is the inert carrier of the work impressed on it, and of the wage charges which have been paid for such effort. This is true of the products of the soil, of the mine and the factory. It is true at the first step of production of raw material, at every point along the economic circuit, and in the market where goods reach the ultimate consumer. With the foregoing distinction in mind, such terms as purchase of materials and sale of goods will be used in preference to any new terms. There are no capital charges of any kind. Money does not participate in production. The nature of capital is explained in another chapter. Money is used in the forwarding of goods and services, and individuals are required to handle this money. Wage charges can be made for this service in handling money, but no charge can be made for the use of the money. Such money would be used in paying wages during operations on materials and would be retired from the sale of the goods produced. The producing plant would not be privately owned by the users but owned by the community. And there would be no capital amortization charges, no interest or dividends to be paid, and no maintenance charges to be included in the cost accounting of the goods produced in the plant. Capital goods are consumed just as are any other form of goods, and there is no requirement, ethical or economical, that they be amortized or immortalized. Capital is supplied as required from the Community Capital Fund, and this fund is maintained by a direct tax on all incomes. The accounting for capital, therefore, does not come within the scope of cost accounting on production of commodities. There will be no charges for taxes, since there will be no taxes on anything in the production process. The only tax levied will be a single tax imposed on a uniform percentage basis on all individual incomes. This will not enter in any way into cost accounting of production process. The only items which can be figured in a cost sheet of articles produced are the price of raw materials, power, heat, light, telephone, transportation, supplies, advertising, selling, etc., and the services actually paid for as wages. All costs will be figured in terms of labor units. The total cost of an article will be the total number of labor units expended in its production. The labor unit will have a fixed dollar value. The cost will be the same whether stated in terms of labor units or dollar units. Under a scientifically sound cost accounting system, the price of an article is its exact cost. Nothing can be added for any purpose whatever. There is utterly no need for so-called profit. All parasite charges are removed. All factors which would interfere with the natural flow of goods are eliminated. It is made possible for the producer to receive the full value of what he has produced. All overhead charges, taxes, etc., are paid directly by the producer through his single tax, which provides capital, maintenance, social security, and government support.